The price of gold has soared to a new record, topping $5,000 an ounce for the first time. Investors have been looking for a safe haven amid global uncertainty. Fears of a renewed trade war, inflation, and the potential for another US government shutdown have all been fueling gold's record run.
At Dubai's famous gold souk and in markets across the world, small investors are buying gold. And for now, there seems to be no stopping them.
People are rushing to buy gold. The price doesn't matter to them anymore. Whatever the price is, they buy it. Before, the customer used to bargain over the price. Knock it down for me, lower it for me. Now they just come in and whatever the price is, they buy it.
Despite the high prices, global gold production has risen only slightly. Output cannot be increased quickly in the short term, and that limited supply is further fueling the boom.
What we have been seeing for months now simply shows that uncertainty in global markets has increased. And as a result, investors are turning to gold as a safe haven, as the immense demand right now clearly demonstrates.
Confidence among major international investors in the dollar and in US government bonds has been fading. Assets once considered rock solid have lost some of their appeal under Donald Trump.
When we look at the United States, we've seen a very erratic policy approach in recent months since President Trump took office. There are also significant fiscal risks due to the expansionary fiscal policy in the US, quite apart from the foreign policy issues we're dealing with at the moment.
Ganz abgesehen von den außenpolitischen Themen, die wir momentan dort haben.
Gold prices may remain high for some time yet. Central banks in major emerging economies, including Brazil, have been sharply increasing their gold reserves, pushing prices even higher.
These countries are suffering greatly from a weaker dollar because of their trade with the US. Brazil is a good example. That's why they want to massively increase their gold reserves to stabilize their own currencies when the dollar moves. And beyond that, they want to make themselves less dependent on the US dollar.
For now, there's no sign of an end to the gold rush. The forces that might drive prices down are nowhere to be seen. No sharp rise in interest rates to make government bonds more attractive. And no end in sight to global geopolitical uncertainty.
Gold and silver and platinum are all at record highs. Stephen Beardsley joins us from DW Business.
Hey, Ben.
Is this just a mad rush to safe havens?
I don't know if it's a mad rush. I don't know if that's how I would characterize it. It's definitely a move towards safe havens, as that piece really laid out and quite well, which is that with so much uncertainty over the past 12 months in particular, we've seen the biggest movement of these prices, more than 80% rise in gold's price over the last 12 months, and then 16% in January alone. So if you think about what's happened over that time, then you have, for example, the issue with Greenland, you have the investigation into Jerome Powell. Those are both deeply unsettling for what they say about the U.S. and its ability to manage its money supply in a neutral way and to uphold international agreements in a neutral way. And then if you just look at the past few days, the threats against Canada of a new trade war, and then what's going on in Minnesota and the possibility that there could be a government shutdown, that's also caused a spike. So whether you're looking at the long term, and by this I mean the last 12 months, or the very short term, the last few days, there's reason to believe that there's instability, and that's what's feeding into this. Again, there's less evidence that it's a mad rush and that we're seeing everyone from institutional investors to investors in a bazaar in Lebanon going for it, because they know that with the value of the dollar falling, then there are both legitimate reasons to hedge your own currency, to support your own currency, I should say, and to hedge against risks to buy gold. And so we're seeing it across the way. It's not just a mad rush, but it is actually thought out as part of a portfolio. And that's interesting.
But I have been reading that a lot of new investing is being done in gold. I mean, are people scared of missing out? Do they think things are crazy, now's the time? Or could things settle again and even dip when people decide the world isn't really in that bad of a shape?
I think there's always going to be some sort of fear of missing out and people trying to get in on a trend that's going up right now. The difference is that if we look at those who are investing in gold, again, there's a wide breadth of investors. And so we're seeing, for example, more exchange-traded funds, very traditional investment vehicles that are now moving into gold more than they have in the past. We're seeing high-value families that are buying gold as an asset for them. And then of course we're seeing central banks, like we mentioned there, because they're trying to support their own currencies as the value of the dollar fails. So whether it's strategic, whether it's tactical, whatever it is, there's interest in gold across the way. And that's what makes it interesting. Yes, if there's a de-escalation of some sort, if we see that, in particular, the U.S. begins to move in more predictable ways, then you will see that there's a move away from gold, because there will be other things like bonds, which carry, of course, earn interest, which gold does not. And so the opportunity costs of missing out on that become much higher. And so money will move in the other direction. But for the time being, I think you're going to see this sustain.
And really briefly, do you think it's going to hit 6,000 like some banks are saying, or even higher?
I can't predict that, but I know that Goldman Sachs is saying about $5,400 by December 2026. And these rallies tend to stick around for a while because the underlying issues are very structural. So it's probably not going to go away soon.
Okay, Stephen Beardsley, thank you very much for joining us.
Yeah.